Assalamualaikum. My name is Cik Hana Sabrina binti Nia Hamidi. My matrix number is 080982. Carlsberg is one of the globally renowned brewing companies, founded in 1847 by J.C. Jacobsen in Copenhagen, Denmark. The brewery is known for its quality and innovation, with its expansion from a small local brewery to become one of the leading manufacturers of beer in the world. Carlsberg is a global brewing company known for its beers and beverage, distributed through strong supply chains and partnerships around the globe. It invests in areas such as marketing, sustainability, and innovations, offering eco-friendly packaging and efficient brewing processes. Carlsberg is also supports B2B partners with technical help, training, and tailored solutions.
First of all, the current ratio measures a company's ability to meet short-term obligations, calculated as current assets divided by current liabilities. Carlsberg Malaysia's ratio was 0.37 in 2021 due to COVID-19 impacts like lower sales and cash issues. It dropped further to 0.22 in 2022 from inflation, higher costs and geopolitical unrest. In 2023, it improved slightly to 0.31 thanks to economic recovery, hotel demand and better cost control. Next, the asset turn ratio measures a company's ability to pay liabilities without selling inventory, calculated as current asset minus inventory divided by current liabilities. Carlsberg Malaysia's ratio was 0.06 in 2021 due to the pandemic, short-term liabilities, and slow inventory turnover. It rose slightly to 0.08 in 2022 with low demand and inflation keeping liquidity tight. By 2023, better sales and cost control improved it to 0.16. For the inventory turnover ratio, calculated as COGS divided by average inventory, shows how often inventory is sold and replaced yearly. For Carlsberg Malaysia, it was 21.77 times in 2021 due to pandemic effective management and rose to 31.56 times in 2022 due to demand recovery. However, it fell to 21.8 times in 2023, likely due to slower inventory movement or higher production costs. Then, the average collection period, calculated as AR divided by net credit sales multiplied by 365, shows how long it takes to collect receivables. Carlsberg Malaysia's period was 17.3 days in 2023 due to effective management, 16.9 days in 2022, showing slight improvement but rose sharply to 28.18 days in 2023 due to slower payments, tougher credit terms, and inflation.
Non-current asset turnover. Now, this ratio measures the firm's efficiency in utilizing its property, plant, equipment to generate sales. Through my analysis, Carlsberg Malaysia non-current asset turnover rose in the year 2021, reflecting a strong recovery and improved asset efficiency post-pandemic. However, it declined in 2023 due to ongoing investment and slow revenue growth amid rising costs and economic pressures. Total asset turnover. This ratio measures how efficiently a company uses its assets to generate revenue. It indicates how well companies are being used and if they are generating enough returns. Through my analysis, Carlsberg Malaysia total asset turnover increased from 2021, indicating better asset utilization and revenue generation. However, it dropped in 2023, impacted by economic factors like inflation, rising costs, and potential issues such as higher inventory, receivables, or underutilized assets. Debt ratio. Total debt comprises current liabilities plus long-term liabilities. Debt ratio is a financial metric that measures a company's financial health by comparing its total debt to its total assets. Through my analysis, Carlsberg Malaysia debt ratio rose in 2021 to 2022, driven by increased short-term liabilities, but in 2023 it decreased as the company carefully managed and repaired some borrowings, stabilizing its financial leverage. Debt to equity ratio. The debt to equity ratio measures the percentage of borrowings used compared with total equity. Through my analysis, Carlsberg Malaysia debt to equity ratio crazily increased in 2021 to 2022 due to increased borrowings for investments. It slightly declined in 2023 as the company adopted more sustainable debt management practices.
Next, time interest earned. This ratio measures a firm's ability to cover interest charges using its operating profit. A higher ratio shows better capacity to settle interest charges. For the formula, EBIT divided by interest expense. For the comparison, Carlsberg ratio increased steadily over 3 years due to higher EBIT, showing stronger cost management. Interest expense remains stable, likely from effective debt management. Next, gross profit margin. This ratio shows the percentage of sales left after subtracting COGS. A higher ratio indicates better cost efficiency. For the formula, gross profit divided by sales. For the comparison, Carlsberg ratio rose over 3 years. It was lowest in 2021 due to lower sales from the COVID-19 pandemic. In 2022, it increased as demand recovered. By 2023, it improved further with reduced costs. Operating profit margin. This measures core operating profit after all costs except interest and taxes. A higher margin shows better profitability. For the formula, EBIT divided by sales. For the comparison, in 2022, Carlsberg margin dropped due to higher operational costs. However, it improved significantly in 2023, showing better sales and cost management during economic recovery. Then, net profit margin. This ratio highlights profitability and pricing strategy. Companies with losses cannot calculate this ratio. For the formula, net income divided by sales. For the comparison, Carlsberg net profit margin decreased in 2022 due to higher expenses and taxes during COVID-19. It rose in 2023 due to stronger sales growth, cost control, and lower taxes. Return on assets. Return on assets measures how effectively a company's management utilizes its assets to generate profits. For calculation, net income available to common stockholders per total assets. Return on assets for Carlsberg Malaysia was increased for 2021 until 2023 because of the effective pricing strategies. Next, return on equity. Return on equity measures the profitability generated for common stockholders from their investments in the company. For calculation, net income available to common stockholders per common equity. Return on equity for Carlsberg Malaysia was increased for 2021 until 2023 because of the revenue growth. The company reported a significant increase in revenue driven by higher sales volumes and effective pricing strategies. Earnings per share. Earnings per share (EPS) is a key ratio for common stock, widely used by public companies and fundamental to investors. For calculation, net income available to common stockholders per number of ordinary shares. Earnings per share for Carlsberg Malaysia was increased for 2021 until 2023 due to recovery from COVID-19. Next, price-earning ratio. The price-earnings ratio compares a stock's market price to its earnings, helping investors assess if it's overvalued or undervalued. For calculation, market price per share per earning per share. Price-earning ratio for Carlsberg Malaysia in 2021 until 2023 was increased because of market perception and investor sentiment. To conclude, based on the financial ratio analysis, 2023 stand out as Carlsberg Malaysia's best year, while 2022 was the worst. In 2023, the company benefited from economic recovery, increased demand for premium products, and successful cost management and operational improvements. These factors boosted consumer spending and market confidence, leading to better profitability and efficiencies. In contrast, 2022 was challenging due to lingering pandemic effects, inflation, and supply chain disruptions. These factors hindered recovery, increased costs, and worsened financial risks, as high debt and operational obstacles held back growth. Overall, 2023 showcased Carlsberg's strong recovery and adaptability, while 2022 revealed the difficulty of maintaining stability amid economic constraints and post-pandemic uncertainties.